Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks. It's great to be here as always.
All right. So I look at Carnival Cruise Lines. The stock's down 12% this year, having a good month here, rebounding ahead of earnings. But Landon, is this just misexecution? Is it mismanagement? Because bookings are at record levels. The CEO even came out last quarter and said that. And more people are taking, I think they're booked through the whole year of 2024, and 2025 bookings are at record pace levels also, according to the CEO. But this stock is down. It's like it can't get out of its own way. I mean, I don't know what else they could do because they're at capacities that are above 100% at this point.
Yeah, I mean, when you look at how well the cruise line industry is doing, it's back, right? I mean, it's been kind of on pause since 2019 and working its way back from that devastating COVID lockdowns. And I think this is the last quarter for Carnival was the first one, I think, where they actually had revenues higher than 2019 on a fiscal year basis. And cruise line passengers overall, I think in 2023 the number I've got is 32 million, which is higher than 2019 for the first time. So again, it's kind of like, all right, a collective sigh of relief from the industry is we're back, we survived the lockdowns. And now let's get going and make some money. Carnival though is one of those. It's kind of a head scratcher. I mean, you look at Royal Caribbean, PE ratios right around 20, Norwegian's right around 21, Carnival's I think about 50. So you could argue that they're doing really well when it comes to the stock price if you look at that metric alone. But one of the things that they're trying to do is clear debt from their balance sheets. I think that's a big concern for investors. But they've been doing that. They've been chipping away at it a little bit each year. So that's the good news. When we look at the data overall, they're not doing great as far as customer perception or customer demand. Royal Caribbean is definitely the leader when it comes to increases in year over year. People looking at consumer demand, web visits, things like that. Norwegian's doing well. Also, Carnival's not doing so great. When it comes to happiness, they're kind of middle of the road. So they're of the three, I'd say that they're probably the weakest. I know that they've got some decent earnings expectations coming up here. You can see that the happiness, they're kind of right there in the middle with Norwegian leading the pack as sort of the more luxury one. When it comes to earnings, they're estimated to, I think, lose a penny per share, which is up from 17-cent loss quarter over quarter or 31-cent loss year over year. So that's good. I think things are going in the right direction, but overall, the data that we've got is just kind of ho-hum on them. It's not great. And when you combine that with, again, the PE ratio, I'm not a big valuations guy, but you got to look at it. It's not real exciting. And here, of course, this is what I'm talking about when it comes to consumer data, consumer demand. It's the weakest of the three. So, overall, I think the cruise lines are doing well. They're coming back. Even Carnival's coming back, but it's just not nearly as strong. People aren't, at least they're not as excited about, talking about on social media or booking as the others too. So a little bit concerning there, but overall the industry is finally headed in the right direction.
Landon, I wonder what's the good news is what you said. All these cruise lines coming off the devastating amount of debt they had to take on to stay in business. They're all getting better, right? Revenues are doing extremely well. The good news is the demand is there and they're paying off debt and they're getting better, but it's coming slower than we thought. Look at a 3-year chart. It took a pretty big dip and it is slowly gaining ground over the years. But the thing about Carnival is it's probably the lowest price point of the three companies that you're talking about, right? Royal Caribbean, Norwegian, pretty luxury ships in a lot of that capacity. So maybe a little less worrisome about a slowing economy. I mean, Carnival is the lowest price point of these groups. So I wonder if it has something to do with that or the fact that they're one of the bigger ones though. So they've got a lot of ships, a lot of debt, and it's just a slower process. Remember, even in the airlines, Delta, United doing better than American. And so the balance sheet matters, Landon.
Yeah, it really does. And, when you talk about like the size of the companies, it's interesting. I looked this up because I just didn't know, but Carnival's got 26 ships, Royal Caribbean's got 26 ships, Norwegian's got 17, so they're both on their way. But Royal Caribbean's got the big boys coming out. Yep. They had the Icon of the Seas, Utopia's coming out. Those are like game changing type ships, and Carnivals are a little bit older. Generally speaking, they're not as flashy. They're definitely the cheaper one to go on. We talk about this with the restaurants, like the trade down effect, where people are taking different types of vacations, trying to save money. They're doing that at the restaurants, but they're doing it on vacations as well. What I found really interesting, our research team brought this to me, was the average cost for a domestic land vacation is about $140 a day. The average cost for a cruise is about $90 a day. So as long as you get there, right? I mean, if you're in the area, you drive there, that's, you're saving on that. If you have to fly, you have to add that into the equation. But it is a cheap way to take a vacation. I think that's one of the reasons that people are, that the industry is starting to do well, is there is this trade down effect. And then it's just a matter of, which one do you want to go on? Are you going to go save all the money as you can and go on Carnival, or are you going to, spend a little bit more and go on the other two? So that's, we'll see how that comes out. But right now, I will say that based on what the market's done, based on what the stock has done over the recent little bit with trading on Carnival, it's not a super exciting name for me right now. I think that a lot of the good news is probably baked in, and a lot of the social data that we have, again, is just not super exciting when it comes to what the consumers are likely projecting on this one. So I don't love Carnival here. I don't hate it. It's just one that, if you're going to trade a name, I think you trade one with a little bit cheaper valuation and maybe a little bit more questionable on the upside, whereas a lot of this upside is baked in already. And I think that probably analysts are expecting good numbers out of it. So if there's any kind of miss, it could be bad for the stock.
Yeah, I was surprised at your happiness levels that Royal Caribbean was actually below CCL, which is considered the value portion of this. But then you look at RCL, it's near record highs here, Landon, just below that. And if they have comparable ships, you mentioned estimates for EPS are supposed to be anywhere from -1 cent to -3 cents. I think the company gave a forecast of -3 cents. If that turns positive, is that good for this stock? And do you guys have an earnings score on it?
Yeah, I mean, obviously, anytime you beat expectations, it's going to be good. But it's already expected to do so much better than quarter over quarter, so much better than year over year. That's why I'm saying a lot of it's baked in. And I will say, I think a lot of the happiness, I looked into that because I was surprised, too, with Carnival beating Royal Caribbean. A lot of that has to do with the pricing. Royal Caribbean's pricing is definitely higher. And there's actually a lot of people specifically talking about the new ship, Icon of the Seas, because it's so expensive. But it's like it's the mega ship. It's everybody wants to go on it, but then they check on it, and it's like $2,500 a day. They said, okay, that's ridiculous. So I think there's some pause there with that. The score that we've got is -10 right now. It's not a huge score. It's not, short a ton or buy puts, but it's just a little bit of tap the brakes and let's see what they come in at. Because again, I think expectations are pretty high. The stock, even though it's down, has moved up a little bit in anticipation of this. And the data that we've got is just not super exciting about the consumer.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data. And to his point, Kevin, stock's up 8% so far in the month of June going into these results. But this thing seems like it's topped out around the $19, the $20 level a couple times over the last 8 months or so.